welcome back. I'm going to be doing a little tutorial walkthrough kind of thing for CRT and the model we based our main algo off of, which is candle range theory. Just to get started, go follow Romeo on Twitter, and I believe he has YouTube too as well. He's who I learned CRT from. I'm just doing a walkthrough and possibly going to show some stats of CRT, backtesting stats, because Romeo can't show all that. He doesn't have the algo we have. Obviously, we have a lot of filters and stuff like that that make it high probability, like high time frame levels, key levels, bias, stuff like that, stuff that he talks about. But yeah, go drop him a follow, because that is who really threw the idea out there of CRT and candle range theory. So just to get into it now. So candle range theory, start off with the basics, is the idea that all candles are ranges. And what that means is that range trading rules apply to trading every single candle on the chart. So you have a candle, right? Let's say this is a daily candle. I'll type it out. So you have a daily candle, one day candle, right? On the daily chart, the candle looks like this, right? Let's say this is a bullish candle. Change the color. So let's say this is a bullish candle, and on the daily chart, it looks like this, right? However, with the idea that all candles are ranges, on the lower time frame, this is going to look something like this, right? You're going to, where's the, so on the lower time frame, right? Like a 15-minute or possibly like a 30-minute, you're going to have, it's going to look something like this. I'll change the color of this so you see better in a minute. You're going to have an open, right? It's going to form a low a day, tap into some sort of key level, possibly something like that. Going to hit a high of day, and then it's going to drop and then close, right? So it could look like this. This candle can also look something like this as well on the lower time frame. You have an open, you have pop up, manipulation down, pop back up, OTE, pop up higher, close, right? So the candle can look something like this as well, right? So it could look something like this. This is just a pretty summarized version of what's happening on the lower time frame. So if you drop lower and lower time frame, right? A 1 hour might look something like this. 5-minute might look something like this, right? But the daily chart is going to show it as this. So what it's saying is that every candle is a range, and range trading rules can apply to every candle. So range trading rules state to sell the high, buy the low of the range, right? So if you go with the idea that every candle is a range, then the high of the range is right here, right? The low of the range is right here. And with range trading, you want to be selling the high of the range, so you wait for a pop up, whatever sort of entry model you're going off of, whatever confirmation, whatever it is. The range high is right here. Range high, you wait for a pop over it, you get your entry model, whatever it might be, and then you short the high of the range. So you sell the range high and you buy the range low. That would look something like this, right? And what you target is the midpoint of this range, which is the candle, because all candles are ranges. That's the idea of CRT. You target the midpoint and the opposing end, right? So if you took a short, you'd be targeting the midpoint and the opposing end with a stop loss at the range highs, right? The extremity of the range high, this manipulation outside of the range, right? The highest probability CRTs are going to be where you define the range correctly. That's what I've seen with backtesting data, and I don't think that most of the CRT influencers talk about that. You have to define the range correctly. And what I mean by that is you have to be selecting the best ranges. You can have whatever sort of manipulation you want here, right? If it's not the correct range, if this isn't the range that they're going to be using to push the market the other way after they purge the range high or range low, then it doesn't matter what sort of manipulation happens, no matter the time the manipulation happens, whatever it might be. You have to be selecting the correct ranges. And that's a pretty important part of CRT, is selecting the correct ranges. Because everything else can be in alignment. You could have a perfect 930 purge on a Tuesday after the weekly opens down here, forming high of the week, right? If this isn't the correct range, then it's not going to matter. So let me get rid of this. Actually, I'll get rid of that. Okay. So what happens is that every candle's a range. So we have a range right here, right? And on the lower time frame, it looks something like those descriptions on the right. What you wait for is a manipulation to one side of the range. So it might be the range high. The next candle here, the next daily candle might open. It's going to open right here, right? Because bullish candle. So the close is right here. So the next open is going to open somewhere right here, right? You're going to get a manipulation possibly into the high of the range. And what did we say about range trading rules? You sell the range high and you buy the range low. So in this case, you'd be selling the range high. So the daily candle might do something like this, and then a closing, right? So what this is going to do is, on the higher time frame, on the daily, it's going to look something like this. You're going to have a bearish candle if you opened here and closed here, right? You're going to have a bearish candle. It's going to have a wick, right? Because this is the high of the day, right? Because the candle opened here, it popped this high out, right? And then it closed here. So you're going to have a wick in both of these directions. So this is the simplest form of CRT, which is a 3-candle model. So you have candle 1, which is the range you defined, right? So this is the range we're basing our trade off of, and the range that we're just defining off of is this candle's range. Range high, range low, midpoint in here. Candle 2, the next candle, manipulates, and it confirms the manipulation by closing below the range 1 high. And that is where the 3-candle model comes in. This is candle 1. Candle 2. And then the next candle is going to be candle 3. So the 3-candle model occurs when you have candle 1 forms a range. You're defining the range as a specific range, right? It's this candle's entire high to low. Candle 2 wicks one end of the range, but closes back inside. So wick the range high, but closes back inside of this range, below the high, right? So now what you would be anticipating is candle 3 to open, pop above it because of power of 3, right? I'll explain that in a minute. And then you would target the range low and the midpoint of the range. Power of 3 is essentially where it's the idea that all candles, every candle that forms is going to have some sort of wick, right? 99% of cases, candles have wicks. So what does that mean? After the candle opens, no matter what time frame you're on, it pops up, right? Above the open. So every candle, 99% chance, is going to pop above the open. So if you're looking to get in short, and you're not in short here, but you see this setup forming, you should wait for candle 3 to open, right? Because it's going to pop higher. After this candle closes, it's going to pop higher. 99% chance. That's going to pop somewhat higher because all candles have wicks. Whether that's a huge wick all the way up here, possibly taking out this high and then reversing, or it might just pop up a little bit and then drop, right? But because of power of 3, all candles have wicks, right? So it's going to pop above the open. So you're better off waiting for an entry after candle 3 opens. And this would be candle 3. So again, after candle 3 opens, you're looking to short it to the range lows because of the 3-candle model. And then a lot of things make this model higher probability as well, which I'll go through. But this is the model that we're basing our algo off of. And we also built an intrabar one, but that'll be for a different video. I already dropped the video on intrabar. I go through it pretty well. So if you don't understand what intrabar CRTs are, I go through it pretty well, and you should be able to understand it in that video. You can check it out on the YouTube. But 3-candle models what we're going to focus on. So candle 1, candle 2 manipulates, closes. You expect a distribution in candle 3. It's also the idea, CRT is the idea of power of 3. You have an accumulation. your range candle is your accumulation. Manipulation in candle 2. Candle 3 is a distribution, right? So it's going off of power 3 as well. Now, the most advanced version of this would be anticipating the manipulation and entering on the manipulation, anticipating that you know that the CRT is going to form, which is what I am currently in a long in on Brett for. So Brett's just my favorite coin, so I'm just going to be using Brett, just cryptocurrency. Let's go to the 5-day. So right here, I see this liquidity level, right? And I also see that this candle formed inside of this candle, right? So this is putting a few CRTs together. So you have this range in here formed inside of this candle's body, right? You haven't hit this end or this end previous to this 5-day candle. This candle formed an inside bar candle right here as well, right? It didn't hit this low or this high until this 5-day candle. This candle is getting 3 candle modeled, right? And I'm anticipating that it's going to hold the low. I'm anticipating that's going to hold the low of this candle. So we're going to close somewhere up here today, right? And once we do that, we have a valid 3 candle model. I just jumped the gun because I expected this to be manipulation due to Bitcoin's reversal yesterday. So SMT was involved somewhat. Looking at Bitcoin as the leader of the cryptocurrency market, I anticipated that this is going to form a 3 candle model, right? And I'm also basing this mainly off the intrabar trade. So that's this low right here. So you have a range, right? You have all this chop in between. You have a manipulation to the low of this range, right? Taking out the range low, tapping into a key level, this FEG right here. Look at that respect for that, right? After taking out this week's liquidity and this week's liquidity. Forming a CRT, valid setup, right? And if we look on the lower time frame, we not only tapped into a key level, we formed a low time frame CRT on the Model 1, the candle that broke the low of the range. We formed a low time frame CRT, which increases probability, at the Model 1 entry. And that's where I took my long, off of the Model 1 open right here, which I'm going to be swinging. So as you see, that was a lot of information. So go back through it if you need to. Don't feel overwhelmed. Just go back through it. Romeo also has some good videos on CRT. I'm not taking his CRT idea from him. I am just explaining it in a way that I understand it, and hopefully it helps some people understand it a little bit better. And also, I will go through a little bit of data because I don't think that anyone actually knows the CRT data, and it's overhyped. CRT is a good strategy, but it is overhyped. It's not magic. Romeo explains it like it's magic. He might have the golden setup that might work 99% of cases, but as far as I see, most of the stuff that he is saying turns it to ridiculous profitability doesn't help that much. So I could be wrong. He could be doing something completely different, but with all the filters that we added to it, I don't think so. So we have this 3 candle model forming, tap into key level, this intrabar getting swept, this intrabar getting swept. So this is a pretty high probability setup. We're sweeping a lot of liquidity here. This week's swing low, this weekly swing low. This swing low, tapping key level, also tapping a weekly order block right here. That's never been tapped before. Sweeping that low, respecting this bullish imbalance, right? We didn't close below it. Tapping that 5-day key level, bullish imbalance, and also tapping this weekly order block. So there's a lot of adding up here with the low time frame CRT on a Monday. This is one of the most important things, and I would write it down if you don't already know this about CRT. One of the most important things is the daily 4-hour or weekly profile, depending what time frame you're trading. So if you're trading a weekly time frame or like a daily, you want to, if you're trading within the weekly range, so your range that you're looking at is around a weekly timeline, right? So in this case, it's like a weekly 5-day range is what I'm looking at. You need to use the weekly profile to your advantage. So what is the weekly profile? So if you're expecting to go long and you're expecting a move higher, you should be looking for the power 3 to occur at specific times, right? So if you don't already know this, I would write it down. Monday through Wednesday likes to form one end of the range, of the weekly profiles range. So what do I mean by that? I mean that Monday to Wednesday likes to form on a bullish week the low of the week. At some point, in most cases, it's the highest percent chance, based on all the data, that Monday through Wednesday likes to form the low of the week, or the high of the week on a bearish week. So it forms one end of the range. Thursday to Friday usually caps the weekly move. So if you had a bullish week like this, you might come down Tuesday, right? During possibly London session. London session is higher probability as well. Come down during London session, form low of the week during London session, move into Wednesday, Thursday, expanding. Thursday night comes around, we form the weekly range high, and then Friday drops a little bit to close the week, right? So Monday through Wednesday, well really Sunday for futures and Forex, Sunday to Wednesday, or Monday through Wednesday, likes to form low of the week, or high of the week on a bearish week. Low of the week on a bullish week, high of the week on a bearish week, and vice versa. Thursday to Friday likes to cap the range, so it likes to cap the opposing end of the range for the weekly profile. So using this in live data, I am currently long on Brett. I have a long open on my personal account. What happened, right? Where did we open this week? Right there is the weekly open. So we open the week, drop, 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 tap a key level, form a lower time frame CRT on the 4-hour, right? This 4-hour CRT was high probability with it tapping this order block and 5-day imbalance as well, and sweeping this liquidity out, and this liquidity. That was super high probability 4-hour. What do we see? We see the power of 3 happening. We accumulate, we're dropping, dropping, dropping. We manipulate into this key level, we distribute, we get an OTE, and I'm expecting the rest of the week to expand higher. And then on Thursday or Friday, around here, Thursday or Friday time, it's going to cap the range high, right? The range of this week's high, somewhere around here. I'm expecting a bullish week, so I'm betting on price going up. So that's what you see. If you draw the weekly open, monthly open, daily open, you'll see these power 3 profiles play out. So as far as CRT and the trade I'm in, what happened is that Sunday to Monday, Sunday through Wednesday likes to form low of the week. So if I'm anticipating higher prices, I'm expecting low of the week to possibly be already in, right? Because when did this happen? This happened Monday, right? During New York session, morning session, which is important to note that if we drop to 1 hour, when did it actually form? 9 a.m. candle. So that's important to note. 9 a.m. is a key manipulation time. So Sunday to Wednesday, you're looking for low of the week. If you're bullish on the week, you're looking for low of the week to form. Key time into a key level, sweeping key liquidity levels, right? I'm expecting low of the week to be in. Bitcoin also reversed entirely this entire move that happened, right? If we were to look at Bitcoin's chart, which I can real quick. Bitcoin dropped, reversed this entire move, then expanding. I expect this to be low of the week for sure. I don't think Bitcoin reverses this down. So with that in mind, using the leader of the cryptocurrency market as well, keeping that in mind, I expect this to be low of the week. So I'm expecting a move to the range high and midpoint, which would be this 5-day range. With another thing is just I'll explain this in a minute. This is another thing about time. So I expect to move to the midpoint and the opposing end, and also the opposing end of this and the midpoint, but the midpoint's somewhere in here, so I would just be taking profit, possibly right here. Another thing is with going off of the weekly profiles, right? Monday likes to form low of the week, Sunday to Monday, so we formed low of the week, in my opinion, low of the week's end. Now, what other profile could we look at here, right? If we're planning that this is low of the week 2, remember that, week 2. What occurs usually the second week of the month? Just like the second the beginning of the week, right? So during the beginning of the week, during the beginning of the month, we like to form one end of the range. And then towards the end of the month, end of the week, we like to form the opposing end of the range, right? So going off of that idea, what else likes to form low of the month? So low of the month likes to form also week 2. From week 1 into week 2, low of the month likes to form. So now if we're planning on low of the month forming, what would be low of the month? If we want a high probability low of the month, what would happen? We would get a low time frame CRT, like a weekly CRT, right? What are we getting right now? I would possibly guarantee that this is low of the month. Tapping into a weekly key level, forming a weekly intrabar CRT, right? If this CRT ends up forming, which I am anticipating it forming, we likely have low of the month as well too. And what do we also have? We have a daily model 1 forming. You're getting a change in the state of delivery right here, off of this bearish move right here, right? This bearish move, bearish movement, bearish movement, bearish movement. You're getting a change in the state of delivery right here. Have we had that yet? Right here, I guess you could consider it, right? You had this tap into this low. But see how long it took to get above this? I don't count that. What do you have right here that formed the high of the month, previous month, December? Week 1, you tap into this old high, right? You're tapping into this old high week 1. You get a change in the state of delivery right here. It comes and retests the order block, and then you dump from there. So I anticipate that if we form a daily model 1 as well, we have super high probability of this is low of the month, especially being week 2. During Monday on a New York session, week 2, we're forming low of the month in my opinion. So after explaining all that, and I know it's a lot of information, so you go back a couple times. After explaining all of that, what forms a high probability CRT? What's the most important things? It's time, low time frame CRT, weekly, daily, and monthly profiles. Draw on liquidity. Draw on liquidity could be explained as the weekly, daily, and monthly profiles as well. Because if you are expecting that the daily candle is going to be bullish or the weekly candle is going to be bullish, then you're already really anticipating a draw on liquidity. Do you have to define the level? Not really. It's not that important to define the level. It's more important that you know where the weekly candle's headed. So if you're trading 4-hour CRTs, know where the daily candle's headed. If you're trading weekly CRTs, know where the monthly candle's headed, right? Because if you're anticipating a bearish monthly candle, then why are you taking a bullish CRT? Weekly CRT, right? It's super low probability if you're anticipating that the month's going to go down. So this is the most important thing, right? Not RR, not anything else. Picking the right ranges as well, which is one of the hardest things to do. And what that really has a lot to do with is time. Week 1 of the month likes to be a ranging week, right? And week 2 likes to be manipulation week. So if you're picking week 1 as the manipulation, not just any random week, then it's higher probability. If you're picking Asia session as a 4-hour candle 1, that's going to be high probability as well. Because Asia likes to be a range and likes to get manipulated. So as for the video, that will be it information-wise, but this is the trade I am in on Brett, so you can keep updated with it and see how it goes. I expect Brett to go back to all-time highs, but I'll probably cut some right here. I'll definitely move my stop break even here. I won't be moving my stop break even until at least this high is taken. But this 5-day candle closes in 6 hours, so today's daily candle closes this 5-day. It'll have some sort of move back down, right? Giving me like an OT or potentially tapping into the daily Model 1 after this gets closed above. So probably tap into here, which I could probably add to my position. And then I would anticipate that's going to move stupid higher. Especially another thing with crypto right now, specifically, just to veer off track a little bit, is that Trump's getting inaugurated next week. So his inauguration's going to possibly pump crypto as well, as he's very pro-crypto now, and being elected and everything. I think it's going to expand crypto, especially this fake Bitcoin move. This is a fake move right here. This was such a fake move. This was trapping everyone short and getting everyone bearish that were going. This daily imbalance I saw a lot of people calling for. This was a turtle soup and such a fake move. With this fake move right before the inauguration, this trapping people in shorts, and this gave the perfect opportunity for them to buy more Bitcoin and expand it higher after inauguration. And then I would say we're going to dump hard after the next move tops out. That's going to be a very good point in selling whatever crypto you own, in my opinion. Not financial advice, but in my opinion, the next move is going to be where people should be offloading most of their crypto. So yeah, but as far as CRT, I hope you enjoyed the video, and I hope that there was information that will be helpful to you. And I'm sorry for it being so long, but I could do another long video like this as well. Just let me know in the comments or join the Discord and let me know. And one more thing I just want to show real quick, getting off track again a little bit, is the copy trading is going very well so far with the live Blowfin account. Just throw it on the chart. So this is, I think we took 2 trades since this, 3 trades possibly, a loser and then 2 winners. So the account's actually 66% win rate now, and it's up 1150. I just don't have the new screenshot right at the moment. But yeah, copy trading is going super well, so if you want to copy trade the CRT algo, just let us know in Discord and we'll get you hooked up with it. So I hope you guys enjoyed again, and I'll see you next time.